So really, it's going to be an exciting reopen. Markets trading for the first time in 7 days, and so much has happened, including the default of Fantasia, not to mention, of course, the volatility that we saw in Hong Kong. What will you be watching today?
I think a few things that good to be on again. I think the first thing to watch is see how the Chinese markets is going to react to the regulatory noise that we saw yesterday. I think Thursday was a very good rebound that we saw in a lot of the hard-hit e-commerce sector after poor trading in the first part of the week when China is closed. So if I look at the HSCI, we're now probably flat to the last Thursday close. So it looks like it does depend on, it probably will trade with what we saw overnight in the US markets, where the ADRs behave fairly well.
When it comes to the ongoing Evergrande crisis, what's happening with Fantasia, it seems to be that most people think this is not really a systemic risk for the financial markets and for China. However, I continue to hear that more people are worried about overall growth in China. So when it comes to the market side of things, should we be a bit more careful with those highly leveraged names?
I think you definitely are seeing the differentiation right now. We are not involved in the real estate side, so we're kind of bystanders at this point in time. I think what happened on Monday, where you have one of the developers basically willfully choosing the default, that added to distress particularly in the high yield side of the real estate developer bonds, because all investors are now looking at, okay, which one would choose to basically willfully default next. I think that's added to the market stress now. You made a good point in the sense that the real estate market is indeed very large and far-reaching in the Chinese economy. I think we are also taking the view that right now, this is probably controllable. It is not a systemic risk, but the knock-on impact to the growth of the real estate market, as well by extension the construction sector, is something that we're watching quite carefully, as this has meaningful impact to consumer behavior and, of course, economic growth in China.
So if the fallout from the real estate crisis is controllable, I want to put the Bloomberg question of the day to you. What is the next catalyst for Chinese stocks?
I think next catalyst for Chinese stock is truly looking at, we're trying to gauge whether the regulatory system and the regulatory measures are more or less peaking, and we should see a more stable operating environment for a lot of the companies going forward. As you mentioned earlier, overnight we have seen some news flow that the PBOC is looking to make sure that there's no further anti-monopolistic behavior from some of these players. And that's something that I think the market will try to digest today. Looking at how the market reacted, the ADRs reacted overnight, it looks to be okay right now.
Well, the other big macro event we're waiting on at the moment is, of course, the US jobs report. Do you expect that to move the needle much in terms of equities?
I think the jobs report is eagerly awaited because we had a fairly significant miss in the August report. So a in-line to better report would probably firm up expectations that we have seen from the leading indicators from factory orders that we saw earlier this week. I think that's keenly awaited by all investors around the world right now, because the inline job report will probably indicate that taper will probably proceed as expected sometime in this quarter by the US Federal Reserve.
Zhikai, and of course, another issue that we're watching very closely is what's happening with the debt ceiling here in the U.S. Right now, the U.S. Senate has enough votes to advance the debt limit deal. They had been voting on this procedural motion, the cloture vote, the vote before the vote, and they now have the 60 yes votes they need in order to advance the debt ceiling legislation to the full floor. Now, when that happens, they will only need the 50 votes plus the tiebreaker from the vice president, and that could mean that they would be able to raise the debt ceiling by $480 billion. But, Zhikai, this, of course, only means that they'll be able to temporarily raise it. We will again be seeing this debate come December 3rd, on top of the fact that the stopgap government spending bill runs out during that time as well. As an investor focused in Asian assets, what is the risk as we head towards the year end?
It's a very interesting issue that we are seeing in the US right now, the yearly almost debate on the US debt ceiling. I think earlier in the week, there was a lot of concerns. I think this has been percolating for a while now, and you can see the markets trending down as concerned that the US federal government might actually default on its debt, ripple through the market. So that's something that I think investors are definitely taking a closer look at. I think I've seen various Wall Street CEO come out and indicate that they're also looking at their contracts now to basically make sure that they can basically work through a US debt ceiling break in that case. So that's clearly something that investors are looking at. But I think key to what is for the rest of the year is really about the taper and also the US Federal Reserve's view on the interest rates as we go into next year.